Welcome to the ESG Leaders video series. I'm Daniel Brooksbank, Head of Strategic Content at Responsible Investor, and I'm delighted to welcome Nici Audhlam-Gardiner, Commercial Director of One Family. One Family is the third biggest friendly society in the UK, based on membership. It has over 2.5 million customers and holds over £7.5 million in funds under management, and has a large book of child trust fund assets. Great to see you, Nici, and welcome. We're here to talk about your moves to climate-proof your portfolio. Can you tell us what you're doing and why?
Yes, as you mentioned, we have grown up through largely child investments and family investments, and we've ended up with the largest child trust fund book in the UK. And this means that we, a couple of years ago, started to think about what we were going to do to be able to serve our teens well when their first child trust funds came up for maturity. And what we wanted to do and what we started off with was doing a lot of research with both the teens and also their parents to understand what they really needed and wanted when their funds came up for maturity and they had to make some big decisions about what they were going to do with them. And out of that research, it became clear, and it was emerging at the time, that climate and ESG more generally was becoming an increasingly big part of people's decisions. And so we wanted to create something which was going to meet the needs of both the teens and their parents. When we did that research, it was important both that they were going to have this impact, but they also didn't want to trade off with performance. And so we knew that we needed to find something that were both going to serve their needs in terms of providing good investment returns, but also we're going to help them have the right impact on the planet.
How important are the SDGs, the Sustainable Development Goals, in all of this for you, Nici?
For ourselves, they're certainly important, and it did form an important part of the design behind the scenes. And we were particularly looking at the SDGs relating to affordable, clean energy, climate action. However, when we talk to customers, and this probably reflects the type of retail customers that we have, it wasn't something that they talked a lot about or came out as being, so the key things that they wanted to see mentioned explicitly. So they really think about things in terms of real world impact, how it was going to sort of impact the climate, perhaps talked a bit more about specifics of companies and how they wanted to influence behaviours, rather than particularly linking it back to the SDGs. So yes, certainly part of our design, but not really part of our communication to customers.
Can you talk us through the process you went through with your provider? How did that take place?
Yeah, we've had our partnership for investments with SSGA over many years, and so it was really a very easy decision to sit down and talk to them about how they might be able to help us once we got this initial research. And State Street have done an awful lot of work and development in terms of thinking about climate change and how that was going to impact the investments of the funds that they have. But hadn't translated those into retail funds at the time. And so it really was quite a blank sheet for us to be able to work together to use some of the work and the indices that they'd already set up to be able to kind of create these funds. We knew right at the start that climate was important, but what we needed to talk about further was how we were going to use their sustainable climate framework and what kind of funds and impact we were going to have. And over time, developed a view that if we were going to strike that right balance between impact and performance, we wanted to have some funds that, at the very outset, were going to screen out controversial stocks and activities, and then we're going to follow a process of both mitigation and adaptation. So we're effectively going to weight towards stocks that we felt could be influenced, and we're going to have a better way of transitioning towards an ESG type world.
Did you use an external consultant or external advice to develop this?
No, we've got an investment team sitting in-house, and so we're able to very much look at it from what did the product need to look like, and what were the customer insights that we needed to develop the product for. That all sat within one family, and sort of really comes down to our strong heritage in terms of serving these types of customers with their products previously, and then we were able to work directly with SSGA on that basis.
And what's been the reaction from your members?
It's been fantastic. This really has hit a sweet spot for them. And I think actually thinking back that, so when we started to do the research, it was a lot less of an obvious answer that climate impact was going to be the right way to go. So we did have to take a little bit of a leap of faith because there was still a lot of trade-offs that customers believed that they were making, myths, for example, that you were going to have to trade off performance versus impact, which obviously sort of with the benefit of hindsight and so with the benefit of how everybody is thinking about it now is not such of a kind of an issue or concern. But we launched the funds back in September when the first CTF started to mature. We've seen a very good reinvestment rate, but also a very strong feedback from customers that have taken up the funds, and so also from the wider audience, the press, our other members, and so the general public.
So how does this fit in with your product offering? Is it white labeled? How is it presented?
Yeah, so these are labelled as one family funds, and they initially were just developed for those customers whose CTF was maturing and who were going into an adult ISA or a lifetime ISA product. Since we've launched, and at the start of this year, we've now extended it out so that we offer it across all of our adult ISA and lifetime ISA products, so those available to the open market as well. And as we go forward, we are also considering how we roll it out with the rest of our child investments. So we can see, particularly for longer term investments, that parents really want to do both the right thing for their children, but also the right thing for their children's futures. And so it will fit very well in the future with our junior ISA products too.
So what size of assets are we talking about at the moment?
Well, our overall, sort of book, and so the opportunity is that the 7.5 billion that we have under management for our families, and so that's essentially what we're looking for. We're starting them because these ETFs have 9 years of rolling maturities before they all become adult ISAs. We will see this building up over time, but we're sort of very much looking at this as being a solution that we can offer out to all of our customers, and also potentially be able to white label to partners who don't want to develop the products themselves, but yet know that they also have these needs within their customer base.
So, Nici, this is an equity solution, as I understand it. Would you consider other asset classes or a multi-asset solution?
Yeah, I think that's really important because we do have customers who have got different risk levels. And while we offer an equity solution, which is pure climate impact, we also have a mixed solution where we've got the equity component, which is climate, but normal fixed interest type funds making up that kind of lower risk mix. And what we would like to be able to do, and they're actively working with State Street on, is to be able to look at a corporate bond solution as well, which is also climate impact related. And then over the longer term, while climate is important, our own particular purpose and view as a mutual relates equally as much to the social sides of ESG. And so would love to, over the longer term, be able to kind of sort of develop something that's probably a little bit more new in the market, S-focused funds, which, so will really help to influence social type behaviours at the companies that we invest in.
One final question: How does this solution fit in with your tracking error budget?
It's an interesting one because when we looked at this, we needed to be very clear as to what the primary objective of the fund was, and indeed it is absolutely around the climate impact measures, so brown revenues, green revenues, the carbon impact, etc. And we wanted to make sure that we weren't muddying the water by also trying to set a tracking error, which might then reduce the impact that we had. However, we also knew back from our research that we had to get something that did strike the right balance between offering performance to customers as well as that climate impact. And we wanted to make sure that these funds had a good representation in terms of the companies and the stocks and the indices that they were invested in. So while we haven't included tracking error as being the primary metric we look at, we do have it as a shadow metric to make sure that we don't stray too far from a representation of the indices. What that means in practice is that we will look to upweight and downweight across companies within a sector, so that we keep the sectors broadly at the levels that you would see within an index, but we're particularly focused on working with companies where we can influence them and we can see that they're moving towards having positive climate impact, and away from those that we don't think are taking sufficient strides to do so. So in practice, what this means is that there's about a 1% tracking error, but as I say, it's not the primary thing that we are focused on, because otherwise it may lead to a reduction in the climate impact that we can have.
Fascinating stuff, Nici. Thank you so much for your time today.
No, it's an absolute pleasure. Thank you.